Hey everybody, Boris. Welcome to the crosses section for January 30th, February 3rd of 2017. The crosses are very interesting this week because, as I said, I really like CAD on a relative weakness basis, but there's a couple of other interesting tactical trades that I think could really come into play. Kiwi CAD to me is the favorite long play, and I'll show you on the charts exactly why I like it. 96 to the upside, 94 to the downside on the support. And more interesting and sort of a more nuanced play is if you bet on the idea that the dollar collapses or the sort of the dollar rally falters. The weakest yen cross, in my opinion, is the pound yen cross because pound is also relatively weak. And if you get a move to the downside in the yen, there's quite a lot of potential for the downside move. What's interesting about the charts, and I'll show this to you again, is that the risk is very, very tiny. It's either going to fail at these levels or not. And if it fails, the risk-reward ratio here is much, much better than almost any of the charts I've seen in a long time. Euro-Swiss is my final idea for the week. It's very much a off-the-beaten-path trade these days, but what's interesting to note here is that we're breaking some very key long-term support, and that's why I'm putting it on the radar, because a break of that support could suggest that we could be going all the way down to 106.50. The danger here, S&B intervention, but remember, intervention has not been very effective over the last couple of times they've tried it. So therefore, a failed intervention could really cause a much sharper, steeper decline here in the Euro-Swiss than the market thinks. Let's take a look at the charts here and see. Well, let me first start with Kiwi CAD because, oops, sorry, that's the wrong Kiwi dollar, Kiwi CAD. And let me show you. You can see it very clearly on the chart why I like this. So, very strong uptrend, clear relative strength on to the Kiwi side. We had a corrective move for the last week that got held, that basically held support here at 94.60 level. And Friday was a big reversal to the upside. That gives me strong confidence that the market is signaling that the correction is over. We could have a potential here move all the way out to 96, perhaps even if we can break out above 96, a move all the way out to 97 on the trade. This really is a sort of a oil collapsing below 50 trade. In many ways, but I like it on a relative strength basis. The support here at 94, that would be the cutoff point for the trade, and it looks good on a near-term momentum basis. The pound-yen trade is interesting specifically because I love the risk-reward ratio. You see the 145. 145 is just a very interesting resist level here. We're coming up against it here, and it's a tiny amount of risk. I mean, for a pound yen, a 200-point risk is just nothing. So I think risk here to 146.30 or so gives you a very strong chance for a possible unwind to the downside. If indeed it starts to move to the downside, the scope here is all the way down to 140. So the risk-reward ratio in the pound yen is one of the better ones I've seen in a long time. And last but not least, let's take a look at the Euro-Swiss again, as I was telling you. Here's the interesting thing about the Euro-Swiss. So we are at this very long-term support of 107. We broke it. We broke it actually a couple of days ago, trying to trade back towards the 107s. 107.50 is the resist line. But let's take a look at the longer-term chart. You see the break here? The break here below the 107 really opens up the scope here for a test of the 106.50 quite a lot. Now, this is a very slow-moving trade. It's not a lot of pippages both to the upside and to the downside. But my point is, any kind of a trade back towards the 107s probably establishes a very decent short position with a possible move back down to 106.50 as the shorts begin to press their strength. So overall, I like the caddy to the downside as it's a relative weakness trade. I think the potential in a dollar decline gives you pound yen as one of the better crosses to the downside. And conversely, if you do get good dollar strength, I think the flip side of that trade is if we break above the 145 with conviction, all of that thesis is probably very much wrong, and you could let me just sort of go back to the pound yen trade and focus in on this. So a strong close above like 145, 146 really puts a scope all the way out to 148 to the top side. So it's an interesting point of failure here. If it really doesn't reach much beyond the 145s, the conviction that it's going to go to the downside really grows exponentially. That's why I like the trade as the week progresses. So that's pretty much it. I wish you guys the best of luck, the best of trading. Should be a very interesting week both on the majors, and could be some very interesting tactical trades on the crosses as well.